Business meals deduction for rentals. Have you ever wondered if you can deduct meals when managing your rental properties? Let's break down the business meals deduction for rentals and see how it works. When it comes to rental properties, including short-term rentals, business meals can indeed be deductible. However, there are specific rules you need to follow. First, the meal expense must be directly related to the active conduct of your rental business. This means the meal should be part of a business discussion, meeting, negotiation, or transaction linked to managing your rental property. The expense must also be considered ordinary and necessary. This means it should be common and appropriate for your rental business and not lavish or extravagant. The Internal Revenue Service typically allows you to deduct only 50% of the cost of business meals. To claim this deduction, you must keep thorough records. This includes saving receipts and noting the business purpose, date, location, and attendees of the meal. It is essential that you or a representative is present during the meal to qualify for the deduction. In the context of short-term rentals, you might find business meals occurring when you meet with contractors, property managers, real estate agents, or potential business partners. For example, if you have lunch with a cleaning service provider to discuss their services for your short-term rental, that meal could be partially deductible. However, personal meals or those primarily for social or entertainment purposes are not deductible. Entertainment expenses are generally not deductible unless they meet specific exceptions. It is also important to separate your meal expenses related to your rental business from personal expenses. If you use the property personally more than 10% of the time it is rented, you will need to allocate expenses between personal and rental use. This can affect the deductibility of meal expenses tied to rental activity. In summary, if you have business meals that are directly connected to managing or operating rental properties, including short-term rentals, you can deduct 50% of those costs. Just remember to keep detailed records and follow the Internal Revenue Service rules to maximize your deductions while minimizing the risk of an audit.